Welcome to Earl Stewart on Cars.
For a year or less, a rental would be the answer. And the reason I say that is that your maximum depreciation occurs in the first 12 months of ownership of a car. So when you lease a car, you're paying through the nose for that depreciation. If you have a 36-month lease, then your depreciation is amortized over 3 years instead of one. Cost of a 12-month lease would be prohibitive. You'd be basically returning that car to the leasing company. They'd love to have the car back because they've got all the depreciation out of the car, pretty much, not all of it obviously, but a substantial amount of the depreciation occurs in the first year, and then they're able to turn around and sell it and make a nice profit. Oftentimes, rentals are the way to go, even with people with marginal credit. And at my dealership, from time to time, we have people that their credit is so bad that either they can't buy a car or they have to pay an exorbitant interest rate, and sometimes subprime lenders will charge upfront fees as much as $2,000, $2,500. So it's so expensive to finance a car, sometimes you're better off to look at a rental. And the rental companies will have discounted rates for a week, as opposed to daily, and then for a month is even lower, and then you can even go up to 5 and 6 month rentals. I don't think once you get up to 12 months they call it a lease. It's all terminology. One thing I also want to mention on short-term leases, you see a lot of them advertised. You say, well, why would a dealer advertise short-term leases 12 months and 24 months? 24 months is really too short a term, too. 36 months is about right for a lease. 39 months is stretching it. 48 months is all you want to go. But let's say a dealer's advertising a 12-month or a 24-month lease. This opens a door for a very sneaky type of deceptive advertising. And if you look at any lease ad today, whether it's television, newspaper, radio, every lease ad in the fine print has a down payment. And, most people lease cars because they don't want to come out of pocket with cash. So to put a large down payment in a lease is strictly deception, and they do it, and because they lower the monthly payment. I mean, it's not uncommon to see leases advertised with $5,000, $6,000, $10,000. I've seen leases advertised with $15,000 and $20,000 down payment hidden in the fine print. On a short-term lease, the down payment reduces the monthly payment much more substantially than a longer-term lease. I mean, think about it. Let's say you get $6,000 down on a 12-month lease. Now, you amortize that $6,000 over 12 months. That's $500 a month. So let's say the lease was $700 a month with no down payment. You advertise the lease for only $200 a month, but in the fine print, it says you got to put $6,000 down. Now, if you put that same $6,000 down on a 36 or a 39 or 48-month lease, then it doesn't have that dramatic impact on lowering the monthly payment. So anytime anybody out there is thinking about a short-term lease, it's a bad idea. Anything under 24 months or lower, don't lease a car. Make it a minimum of 36 to 39. And if you have to have a short-term use of a car, then the short-term rental, it's all semantics, whether 12 months is a rental or 12 months is a lease. But the nice thing about the rental is you're not paying that depreciation. You only have the car for a short period of time, and the rentals are based on daily use and not a full year. Now, another thing, and there are companies out there that rent used cars. You get a company like Enterprise, and some other smaller leasing companies, not the big ones, Hertz, Avis, National. They typically rent new cars. The smaller companies, they will rent used cars, and if you get a used car rental, you really got yourself a bargain because most all the depreciation is out of that car, and it carries through in a lower monthly payment. The thing you got to watch out for a daily rental, they want to sell you a bunch of insurance and other types of protection, which you don't need. They want you to waive the deductible. They say if you don't buy this insurance, you're going to have a $2,000 deductible if you damage the car. And if you're a homeowner or even if you're a renter, your homeowners and rent insurance usually covers daily rentals. And if you own a car, that'll cover you in a daily rental for accidents if you wreck the car. Chances are your own insurance policy will cover you. Don't buy the extra insurance. And they'll also try to sell you personal injury insurance. And there's a lot of extras. You could go up there and respond to an ad for a daily rental for $25 a day and end up driving out with a $35 a day charge, $10 a day for a bunch of insurance that you don't need. And by the way, the rental agents are all on commission. And so they will really, really try to frighten you and tell you, you got to have this, and this, and it adds up. That's where they really make their profit in the daily rental business, where it is with those extra insurance, and both for waiving the deductible and for the personal injury and disability, and you name it, they try to sell it to you. Just rent it, don't buy the insurance, and that's the way to go. Earl Stewart.